Okay, so this seems to be better now. Let's see. Okay, so this seems to be better now. Let's see. Okay. Mm, All right, seems to be all right. Okay, cool. All right, this is the first time I'm ever streaming, so you gotta bear with me. But yeah, as I said before, I just kind of wanted to start doing live streams because I ramble in my videos anyway. Don't really put too much thought into them, so but I just wanted to talk about gold this week, figure out where we kind of are in the market, how everything is looking. I did a video yesterday on trade setups for gold and kind of want to see how we're doing with that, all those types of things. So here's the charts. So there's going to be two main things I want to talk about in this video. The first one is just general price setups for gold, what I'm kind of looking at right now in terms of gold. And the second key thing really is about the key economic event this week, which is going to be based around, sorry, let me just get this set up, with the CPI data, which I think obviously is going to be very, very important for the gold price, because if we look at last month, for example, it was extremely clear that when the CPI data was totally overshot the forecast, it did lead to a short-term price correction in gold. So we're going to talk about that a bit more. But regarding gold as of now in terms of the trade sub, so earlier today we opened at around this position here, and we did actually have that pullback. So we didn't consolidate, but we actually pulled back a bit. I actually have still the line drawn from, oops. I actually have the line that I still drew from the last video here. And we went a bit lower than that, so we didn't make the 50 and the 21 EMA support necessarily, but we did get into this previous, relatively weak support, honestly. I mean, we bounced off it here, and then we've had the choppy price action here, but it's really good to see that we made support much earlier than I also kind of expected, in the sense that, you know, um, as a bull, it's good to see that we kind of bounced off this level again and not somewhere lower, like in the 1870 range or something like that. But we really did kind of set that almost like higher low here on the 1 hour time frame. And now we're kind of doing that retest again, right? So actually, this would have been a really, really good re-entry point. I had a position open around 1880, as I mentioned before. I took the position as we started this run up based off the data on Friday, the NFP data. But this would have been another really nice entry point as we saw that kind of flattening out here. So I did actually take another position around, I think it was 1887. I'd have to check my MetaTrader because we kind of got that confirmation bounce. And I'm just kind of now waiting to see what we're going to do as we approach this resistance level again, right? But it is kind of coinciding really nicely with how the DXY is performing at the moment, right? This is what I was talking about with the NFP data before, that when you have the DXY data, or sorry, when you have the NFP data and it came out and it was pretty bearish for the dollar, we're going to continue seeing this effect in price action over the coming days. It's not just going to be that short. People just think about it in terms of that short-term volatility, but it's also really about what it does for the coming days, right? And it's going to be the same thing for the CPI data that's going to be coming out on Thursday, June 7th, or sorry, June 10th, right? It's also going to be very important to see because the data that comes out there is certainly going to probably affect the market over the coming days, especially when it comes to gold price, right? Just given the correlation between gold and the dollar. So, but we had this almost like kind of mini level support here, and we're now kind of breaking through that. We're re-entering. We broke below 90 on the DXY again, which obviously looks pretty good for gold. So it would be really great to see again two kind of potential scenarios. With one which I think is more likely if we go to where the fuck is the painting tool? I always get this shit mixed up. Here we go. If we see some sort of breakdown and come back and then start to retest this lower level here, that's probably what I think is going to happen, at least in the short term, like over the rest of the day and probably tomorrow. I think we have to also understand that uh, the market is pretty tentative at the moment, right? Just because we also know that CPI data is coming out this Thursday. Obviously, there's throughout history, there has been some correlation between inflation and gold, right? And especially last month, what it showed us was that when the CPI data overshot, there proved to be huge volatility during that time. And then for over the coming days, we actually saw that kind of downward trend play out. Okay. So this could be one option here, which I think is a slightly more conservative option. The second option could be something also along these lines, I think, which would be something like really going quite down and then going up and then kind of, doing that kind of consolidation pattern. But I'm not sure if we're going to kind of see that. I highly expect more that if we do manage to close for a few hours below this previous level of resistance or previous level of support, that we come back and make it resistance and then continue to go down on the DXY, right? But again, have to remember that we have the really key important data coming out. It's important to understand that, especially with a market like gold, yes, you can definitely trade on on technicals, but fundamentals play such a key part. So if you're not aware of the fundamental stuff that's happening in the market, especially related to the dollar, um, it's those types of times when especially beginners just get wiped out, right? So let's go back to the gold chart. So yeah, price is looking pretty good right now. It's going to be really interesting to see what happens. I'm on the hour chart now, right? It's going to be really interesting to see what happens now when we get to this point again. If we're going to form, like what's going to really happen here? Are we going to almost form like a sort of weird double top here? I don't think so. I think this is kind of setting a higher low. So what I would like to really see, right, the higher low from here to here. So what I really would like to personally see is gold break through this kind of 1895 resistance level and actually try and break through 1900, get rejected a bit. And I would like to see price kind of consolidate around here a bit before we kind of hopefully make that push over 1900 in the coming days. But again, with the CPI data coming out, we have to really see if that's going to be bullish or bearish for the dollar. But that's going, or yeah, bullish or bearish for the dollar, and consequently bullish or bearish for gold. And that could either be the catalyst which helps us really push through that 1900 level if it's bearish for dollar, or go back down and maybe retest 1870, 1880, or even this support level here around 1860 if it's bullish for the dollar. Okay. But this is kind of the price action I'm hoping to see. And yeah, let's see how it kind of plays out. We've seen pretty similar price action here before. So because of the 1900 psychological level, I just think that, that's why we're getting so much of this choppy price action, because people really want to kind of take profits close to that level. So we have to see how the market reacts once we get to that point. But so far, it's looking pretty good. And yeah, like I said, like I've said previous videos, if you want to if you want to play in very low time frames, yes, you can short the market. But if you're trying to play on slightly longer time frames, like 1 hour and then also like the 4 hour chart, um, definitely better to go long at the moment. Look for pullbacks because definitely from a fundamental standpoint, gold is looking pretty bullish, and more importantly, the dollar is still looking quite bearish. And I'm not sure if there's going to be an increase in interest rates anytime soon, or more discussion of that, um, which is going to really change that overall or overarching narrative, right? Okay, so now let's also talk about the big data that's going to be coming out on Thursday, right? Which is the CPI data. Okay, so if we go here, I'm on investing.com. You can also use Forex Factory. I just personally like investing.com, honestly. I find everything just to be a bit cleaner. That's just my personal preference. Okay, so if we look here, so this is where we actually totally overshot the forecast last month, right? So if you're not aware, the CPI, the core CPI data, basically, long story short, it tries to measure how much inflation there is in any particular economy. So obviously we're paying attention to the US one. And what you have to understand about inflation, or inflation data more than anything, is that the US, the Fed is really aiming to try and have a 2%. 2% is considered to be a very healthy inflation rate, right? If you're too much over 2%, or if you're too below 2%, this is considered essentially unhealthy or bad for the economy and bad for the dollar. Okay. Um, yeah. So when inflation, right now we're in a situation where I think everybody knows that inflation is quite high. Okay. So typically in most scenarios, when inflation is too high, like when we have these crazy shocking numbers like this, right? When inflation is too high, the tendency, or in theory, what the American government wants to be doing, or the Fed, what they want to be doing is they want to actually be raising interest rates. If you raise interest rates, to combat high inflation, what it does is it basically convinces people to, you know, um, to park their money in, certain investment assets, like whatever it's like savings accounts or bonds or whatever it may be, and it basically, hinders over spending and crazy overheating of any market, right? Whether that's just consumers or corporations or whatever it may be. Okay. Consequently, because the way to counteract high inflation is raising interest rates, that of course leads to a bearish gold price. Okay, so that's what we actually saw, right? Or that's how investors were seeing it and traders were seeing it when we had the data released in last month on it was May 12th, right? So if we actually look at the chart here, if we look at May 12th, right, on this particular day, let's go to a lower time frame. Now let's actually go to, because it releases at was it 7:30 my time at night. So if we go to this lower time frame, right, just so that you guys can remember what happened on the day that we had crazy or that relatively shocking overshooting of the forecast, right? Look at this crazy volatility candle that we got in the short term. So obviously watch out, right? If you have positions open during that time and you really want to have them open during the news, make sure you have stop losses set, because you really don't want to get crazily triggered, right? Or completely lose your account during these types of times. And then what we saw with the high inflation number that, or data that came out on May 12th, right? We actually saw price move down over the coming days, right? Until we actually found support around 1810, or what was it, 1812, right? At that time. This was because with that high inflation number, people were actually kind of expecting this to start triggering talk among the Fed, among Yellen or whoever it may be as well, to start raising interest rates. But of course, that action actually hasn't happened. So that's what's really interesting about the CPI data right now, or what we want to try and see. We want to see like what, not only just like how the market reacts, but then also how the Fed reacts to that too, right? Because the Fed meeting is also on the 15th or the 16th or whatever it is. So what we really want to see is, okay, in the short term, where does it drive price? But then also in that kind of like after the first few days that the data comes out, um, what kind of longer term narrative is going to prevail? With the NFP data relatively low still, and or not nearly as high as people were expecting, right? Or not nearly as positive as people were expecting. And on top of that, with the Fed also continuing this narrative that the inflation that the economy that is currently experiencing is so-called transitory, I personally expect that even if we get a crazy situation where, you know, the actual CPI percentage that comes out is significantly higher than the 0.4% forecast, even if it leads to a short-term correction over the coming days, I think we will end up seeing something similar in terms of gold price. Just like we saw back in May 12th, where yes, over the short-term period, we saw a pretty strong correction, right, or pretty strong pullback, but in the end, the gold bulls took over, right? Especially as the Fed continued to say that they weren't going to start taper talk, they weren't going to raise interest rates, and that this inflation is just so-called transitory because it's just going through a period where essentially the economy went almost into complete shutdown, right, as a result of the pandemic. So it's definitely important to watch out for how the market's going to react to this, and it could also obviously provide some really good trading opportunities. With that being said, especially if we actually do get that situation where the forecast, or sorry, the actual data exceeds the forecast and we get a pullback. Okay, so if we get like an actual pullback, which is something along these lines, right? Let's say we actually are up here around the, close to the 1900 level at the time of the release, right? Actually, so oops, fix that. Sorry, of course it would be around. Would be around here, right? The 10th. Anyway, but you get my idea, right? Let's say if we're actually around this price point, let's say at that time, and we get actual data which is significantly higher than the forecast, and we see something like right, but then we get this down, we test this level, go up, something like this over the coming days. For me personally, this is just an opportunity more than anything to buy back into the gold market, because I still think that in the coming months and the narrative of increasing interest rates isn't going to change, aka the Fed is not going to want to increase interest rates. Not right now, not when the job data is still not that great. I just don't see that happening. So any pullbacks that we get from CPI data should, in my personal opinion, be seen more as buying opportunities. So if you get the opportunity to take positions at 1870 or even at this level around 1855, which proved to be such strong support 2 times, right, where we got 2 extremely strong bounces here and here, I think ultimately that's probably going to lead you to good profits, especially when considering that with all the money printing going on, and the general kind of fear, right, in the market and people wanting to actually hedge their bets, I still think that 1928 or ultimately 1950 is a very, very reasonable price target, right? These 2 lines here. So think about it. The opportunity to enter the gold market at 1870 or 1850 and ride that wave up to these upper positions, right? Especially with a pullback from CPI data is actually something that excites me, So it's very, very important to watch this and see how that kind of plays out. Okay. Anyway, but in the short term, just be aware of that. Understand that we're seeing pretty bullish price action right now, but that could obviously switch the script quite quickly. And there could also be like on the day before or a few hours before, people kind of trading in anticipation. So if people are actually expecting it to be more bullish or more bearish for the dollar, people may trade in anticipation, which may cause price to either go up or down during that time. Okay. If we get one last thing I will say is that if we get a number which is actually at the forecast, okay, I don't expect too much to really happen in that particular case. I mean, sure, we're going to see that general volatility, but not that crazy volatility that we saw. And ultimately, if inflation kind of stays the same, I don't think it's really going to also then bring up any interest rate talk or taper talk, right? People are still going, or the Fed is still going to want to then keep interest rates at a minimum and continue this whole process of quantitative easing to so-called restart, the American economy. So if we get a number which is, let's say, 0.4, which is the forecast, yes, that inflation is still high, but it's also not going. In my personal opinion, I don't think it's going to cause. Um, that's not going to cause interest rate talk. Okay, in my personal opinion. So anyway, that's my kind of outlook on it. Let me know if you guys think that it's actually going to be different. Curious to know your thoughts. Um, you know, I'm not saying that I'm right because nobody's ever necessarily right. That's why I don't try and also play the news. I really, if I have a position open, as soon as the news is about to come out, I definitely make sure I have a good stop loss, and I don't try and trade based on my expectations. This is what I think could happen, but again, I'm not saying that it's going to be higher or lower because if you than the forecast, because if you as soon as you start doing that, that's when you end up getting fucked. Anyways, guys, I'll try and do more of these kind of live streams about various topics. Um, hopefully, I can get better at this over time. Anyways, guys, take care.